The bank, especially here in UAE, for example, they are giving very low return, 2%. So many people, they think we need to find another opportunities to invest in it. One of it is to invest in the stock market. But the problem, many people are interested to invest in the stock market, but they don't know how, what is the terminology, how they understand this. So this is, today we will talk about basics of the stock market. What type of securities we have? We have two main groups, public securities and private securities. What is the difference between public securities and private? Public securities, which is meaning securities that are traded in a public market exchange. Like here, there is some companies are traded in the stock markets like Emaar, like Etisalat, but some companies are not traded in the public market. We call it private securities, like for example Emirates Airlines. Emirates Airlines are not traded in the stock market. So when the company are not traded in the stock market, this is what we call it private security. Some companies, they decided to go from private to become public. If the company want to go from private to become public, this will happen through a process we call it IPO, initial public offer. The first time that the current investors, they sell part of their shares to the public, this transaction happen in something called primary market. After that, every transaction that happen on a daily basis, this is what we call secondary market. This is the most important. What we will buy in the stock market is the common shares. Common shares is a certificate that indicates ownership in a corporation. When you buy a share, you buy a part of the company and attain ownership rights in proportion to your share of the company. For example, if the company has 1,000 shares and you buy one share, you become owner in the company. But your ownership or your proportion in the company is what? 1/1,000. But at the end, you are owner in the company. Someone else buy 100 shares. He had 10% of the company. Both of you, they have the same rights, but not the same power. More and more shares you have, more and more power when we have voting to take the important decisions. So the common shares is here, is certificates that give you what? Something, a legal documents that give you indications that you become owner in a corporation. These common shares, this certificate will be traded in the stock market if this company is public company. Private company, as we said, it will not exchange, which is the stock markets, provides the places where trades can meet to arrange their trades, where traders or brokers, they will meet. Here in Dubai, we have Dubai Financial Market. You can see it in Sheikh Zayed Road. We have also Abu Dhabi Stock Exchange, which is a place that brokers or traders, they go there and they trade the stocks there. We will see now how they will trade. But exchange, this is a place. Exchange arrange the trades for the traders based on the orders. We have New York Stock Exchange, which is the biggest stock exchange in the world. We have Tokyo Stock Exchange, and here we have, for example, Dubai Financial Market TFM, which we will take example based on it. Brokers, in most of the countries, you can't buy or sell stocks by yourself. You must have someone in between the buyer and sellers. So here, if you want to buy, you go to the broker and the broker will execute this order to buy. If you want to sell, you go also to a broker. Brokers are met through the exchange. Now it becomes electronic. And these brokers, why they will do that? Because they are taking commissions. And these brokers must be licensed by the exchange. Not anybody can go and say, I want to be a broker. You must take a license to be a broker. Here in the left, you can see the names of the company. This is the companies that are listed in this stock market. Not all the companies in Dubai. No, this is the only public company which is their shares are traded in Dubai financial market. When he said previous closing, we are talking about the previous day, previous working day. Yani for example, today we are Saturdays, there is no market. When I read previous closing, we are talking about Thursday, which is 15th of July. We can see here for Emaar, for example, 3.99. There is many methods about how to calculate the previous closing. Usually it's the average of the last 30 minutes or something like that. Average of the trades, it gave me 3.99. This is the closing of last working days. The market is open at this price, 3.99. These transactions happening at different prices. Here, when he said high price, during the day, which is Thursday, the highest price that happened for Emaar is 4. The highest price, the highest transaction that happened for Emaar is 4.0. The next column is low price. During the day, the lowest transaction that happened for Emaar is 3.94. As you can see, there is buy and sell. I'm talking under the market buy price. There is something called market buy order. Leave it now. I'm talking about market buy price. I have buy and sell. Buy, this is the orders of the people that they want to buy Emaar. What you can see in the screen, first one, volume 46,250, and the price is 3.94. What is that meaning? There is some people, they want to buy Emaar at 3.94. How much is the quantity that they want to buy it? 46,250. Next one, at 3.93, we have 757,283. So at 3.93, there is people, they want to buy Emaar. How much is the quantity? Is 757,283. You can see the buy, we order it from the highest to the lowest. If you have some stocks that you want to sell it, you will be caring about the sell or about the buy.
The buy.
The buy, yes.
Yeah.
Exactly. The buy, it's mean some people they want to buy and you want to sell. Here is the matching happening between the sell and the buy. So if you want to sell, what happened? You will be caring about the buy. People, they love money. So if I want to sell, I want to sell to the highest price or to the lowest price?
To the highest.
To the highest. That's why when they put the orders of buy, they rank it from the highest to the lowest. Put yourself in the same situation. You want to buy at lower price or higher price?
Lower, of course.
Yes, I want to buy at a lower price. So in the sell, we rank the sell from what? From the lowest to the highest, because people are caring about the lower price, because they want to buy at lower price. So you can see the sell. In the sell, which is in the orange, you can see at 3.97, there is 44,645. So at this price, there is some people, they want to sell 44,645. After that, 3.99, 26,640. At this price, people, they want to sell this quantity, and so on, at 4.01, and so on. So this is the way in every market. We ordered, we put the bid from the highest to the lowest, and the ask, which is the sell, from the lowest to the highest. Because people, if they want to sell, you can see with Emaar, he put what? 46,000. What is the 46,000? This is the quantity that the people, they want to buy it at the highest price, which is 3.94. You can see the next column, something called the bid, and you can see 3.94. So 3.94, this is the highest price at that minute people, they want to buy. And how much is the quantity they want to buy it at this price is 46,250. What is the dividend yield? Dividend yield, if I divide the dividends that the company distributed over the price that I paid to acquire the stock, this percentage, we call it dividend yield. The second component, which is the capital gain yield. What is the capital gain yield? Most of you, they know it as a general knowledge. If I buy land with 50,000, I put it here in the whiteboard. So 50,000 buy, and after 1 year, I sell it at 60,000. What is my profit? What is my gain?
10,000.
Yes, which is
10,000.
minus 50,000. It gave me 10,000. My gain here, this is absolute amount. 10,000 dirham, I get it as a gain. But what is my percentage as a gain? My capital gain yield, which is a percentage, I will get this 10,000 and I divide it based on the amount that I paid, which is 50,000. 10,000 over 50,000, it gave me 20%. So when the price goes up here from 50 to 60, I make a return, a percentage on my investment is 20%. I make 20% as a return. This return, we call it capital gain yield. Capital gain yield.